Hey, welcome back. All right, so now we're going to get into Work Together 13-2. Again, this is your virtual class. I'm your teacher, Mr. Matsuka, and we're doing accounting for payroll and payroll taxes. So it looked like we had already done 13-1 Work Together. So let's take a look and see what 13-2 has in store for us. So as always, we're going to open up our Schoology account. Once I get to my Schoology account, I'm going to go to my accounting classroom. I sort of skipped some steps, of course. And if we'll go to our materials section into our virtual lesson plan. Oop, we don't want to go to our virtual lesson. Let's go back to materials. There's Mind tab right there. Let's click on Mind tab again. You have to click on it to open it up. Once it's open, let's log in. My stuff's already there, so we'll just hit sign in. And of course, we want to launch the course. Once we launch the course, there's an icon in the top right-hand corner, some bullet points and dashes. We're going to click on that. It's the quick view. Once we get to quick view, we're in part 2. Once we get to part 2, we're going to go down to chapter 13. When we open up chapter 13, we're going to go to end of lesson review for 13-2. So 13-2 started to talk about how we're going to actually journalize our payroll expense, a salary expense. So let's get to that. And when we get into it, again, some of this was already done. It looks like we were pushing forward. This was chapter 1, right? So chapter 1, they gave us the information we had to figure out our FUTA earnings. Let's take a look at that, see how it goes. Or the first part, I kept saying chapter 1. I just meant the first part. So the first part asked how much, use the selected payroll information for employee earnings records to calculate FUTA taxes. Unemployment taxes are owed on the first $7,000 of earnings for each employee. So if you look at each employee, this is why they give us their prior accumulated earnings. It tells us how much they've earned up to this point. So Nick Ellis had only earned $6,100. Because he only earned $6,100, he still has to pay FUTA taxes on $900 worth of his salary. Evan Jennings has to pay no FUTA taxes because he's already earned $7,900. He's earned more than $7,000. If you earn more than $7,000, you don't have to pay unemployment tax any longer, state or federal. Similarly, Virginia Powers, she's only earned $4,380, so she still has to pay taxes on her $2,620. You know what? These numbers are too small. You know how my vision is. Let me blow that up a little bit. Command Shift plus, Control plus on your Google Chromes can always increase your screen. So anyway, Virginia Powers, $2,620 on her taxes, and Carrie Wolf owes $150 on their taxes. So these are the amounts in which they can be taxed, their unemployment. And so we just take those future earnings. Here they go. So her current earnings was $762.50. She could be taxed on $900, but she only made $762.50. So that's the amount we're actually going to tax her for. This person made $1,040, but they don't have to pay any unemployment tax. So we put the 0 there. 2,620, 527 here. They made 527 of that 2,600. So that's how much they're going to be taxed on. And again, Carrie Wolf only made $849 under that pay period, but only $150 of that is taxable for Federal Unemployment Tax Act. So we take the amounts that are actually taxable, we total them up. This is what the unemployment tax we have to pay as a business for our employees. So that's how you do this. You find the amount of $7,000 or the amount that equals up to $7,000. And then the amount that they actually pay if it's less than the amount that they're responsible for. And then you put those amounts here, and that's what they end up paying their tax on. Everybody okay with that? Send me an email if I need to explain that better. So that's the first step. So the second step is after we get that tax base, and that's what these numbers represent here. After we get this tax base, our job is to just multiply how much they owe the 6.2% times the amount that you could be taxed on. But wait a minute, let's be clear. That's for unemployment tax federal and unemployment tax state. When we talk about Social Security, that's based on the amount that we're paying our employees, period. So even that person who had made $7,000, $7,000 does not matter when it comes to Social Security tax. So these are the total earnings. I need to find me a calculator. On your computers, if you'll go to your Launchpad, they always have calculators available. There's a calculator. So I got my calculator. It says we're paying 6.2% of the actual pay, the current pay for that period, $3,179. So $3,179 times 0.062 should equal $197.10. We're going to round this up from the hundredths to the tenths, and that takes that to 0 to 10. So that's how it becomes 10 cents. I don't know why we have 89.22 here, but that's wrong. Let's see what the right answer is. If I click on it, it'll tell me. There it is, $197.10. It's just what our calculator said. Let's get our calculator back up. Perfect. All right. So with Medicare tax payable, we do the same thing. We take $3,179. Where did I get this number from? Remember, that's the total of the earnings for the current pay period. That's how much we paid. That's how much we have to pay our taxes on. Medicare is 0.145, so we're going to go times 0.0145. That's equal to $46.09, but we have to round it up with this 5, so it's $46.10. Let's click on that and see if that's right. $46.10. Absolutely perfect. Great. We're moving, cooking with fire. So the hard part was the unemployment tax payable federal. That's FUTA, the Federal Unemployment Tax Act. FUTA, now we have to go to our FUTA earnings. This is the tax base for FUTA. So we total that up, it becomes 1439.5, and we have to multiply that by 0.8%. So remember, when you take a percentage, when you take a percent and turn it into a percentage, you have to move the decimal twice. So that's times 0.008, right? Good, and that's $11.51. We'll round that up to 52 cents. Bingo. And then again, we have unemployment tax payable for the state, 5.4%, so we'll go 1,000. It uses the same tax base as the FUTA, so $1,439.50 times 0.054. $77.73, $77.73. We're doing great. How do I get this total? I should just add these numbers up because we had bad numbers there earlier. Our total should be, well, let's just do that real quick. 197.1 plus 46.1 plus 11.52 plus 199.34 equals 454.06. Correct answer is 332.45. What is that about? How did we get so off? Let's check our numbers again. Let's go 89, not 89, clear. 197.1 plus 46.1 equals 243, makes sense, plus 11.52 equals 254, looking good, plus 77.73 equals 332.45. Hey, that's a good lesson for us all. Check your numbers twice. Things can just go wrong for whatever reason. All right, so that was part 2 with 13.2. Feeling pretty good. Let's move on to the next step. The final step, once we've realized our payroll taxes And our payroll taxes, again, Social Security tax, Medicare tax, and both unemployment taxes. So now we have to journalize these. And this is different than our payroll, which is something else we had just journalized previously. So our payroll taxes, let's go down to the bottom. First, we got to find our date. Journalize the employee's payroll tax from May 1st to May 15th. May 15th of the current year. Use General Journal, page 10. Let's go. So we know it's May. And we know it's the 15th. Oops. May 15. Good. Which taxes are we paying? We're doing our payroll tax expense. Payroll tax expense. Why won't it take my taxes expense? All right, so you gotta be perfect with the computer. Documentation number. Where did we get this from? Oh, memorandum number 46. How did I know that? It says it right here. Memorandum 46. So what do we shorten memorandum 46 to? M46. Payroll tax expense. A debit or credit? Well, remember, the first thing you type is always on the debit side. And it's an expense. We know expenses are always debited. What are they debited for? Well, the total payroll taxes. Because that's what we're paying. Payroll tax expense. 332.45. Great. All right. And after this, we need to just start putting in the things that we're paying. So let's go to the top. Social Security tax payable. Social Security tax payable. Tab. Payables are credited. They're always credited. So, well, not always. Sometimes you're paying them off. But 197.1. Bing. Medicare tax payable. Medicare tax payable. Tab. That amount is $46.10. $46.10. Then we have unemployment tax payable. Unemployment tax payable. And then I think they want us to use a dash for federal. Good. Tab. And that's 1152. The federal government doesn't take as much. Your state government takes everything. So unemployment tax payable state. And that amount was 77.73. All right, so those are all the amounts. I feel pretty good. Let's grade that final step. Go down, take a look. Looks like everything is perfect. They feel pretty good about it. 63 out of 63. Hey, that was Work Together 13-2. You got 13-1, 13-2. Try that on your own. Maybe get into those applications, at least the first application. I'll be sending over 13-3 and 13-4 very soon. All right, guys, have fun. Stay healthy.